This game is that surviving day one actually makes day two far more dangerous. After closing a green day, a subtle psychological shift happens. That initial feeling of relief naturally evolves into confidence and then quickly spills over into overconfidence. A winning streak creates a false sense of invincibility. It tricks your brain into thinking you have the market figured out, leading a lot of people to stop respecting their predefined risk management rules. They get emotional, they size up their positions, and that is exactly how a single uncalculated decision can obliterate an entire account instantly. The market conditions today were practically begging for that kind of mistake. I focused again on the EURUSD pair, but the price action was incredibly unstable. This line graph shows exactly how a fake breakout works. The price bounces aggressively between support and resistance, spikes above the top line to trigger a buy signal, and then aggressively crashes back down to trap impatient traders. That erratic behavior punishes anyone trying to force an entry. So instead of jumping into the chaos, I forced myself to sit on my hands and wait. Sometimes actively choosing to do absolutely nothing is the single most important strategic maneuver a trader can execute. Eventually, the patience paid off. I spotted actual bearish momentum starting to form right near a solid resistance level. The sellers were getting aggressive, so I entered a short position, ensuring my risk parameters were strictly locked in. This candlestick chart shows how it started. The red trend line dropped below the entry price into profit. Instant gratification. But within seconds, the market reversed hard. A massive green spike entirely erased the profit, crossing back over the entry line. The violence of that movement pushes the trade past simple numbers and into a territory of immediate psychological crisis. This is the part of trading nobody puts on their social media highlights. Sitting there, watching the red numbers grow, dealing with a sudden, crushing wave of stress and uncertainty. Your inner monologue starts spinning. You ask yourself if you should close early just to stop the bleeding. You imagine the price continuing to spike until you lose everything. It highlights a strange paradox about retail trading. Most people do not blow their accounts because they have a terrible strategy or because they can't read a chart. They fail exactly at this juncture. Biological fear completely overrides logic, causing them to panic and abandon their predefined plan. The survival of a trader depends on their ability to regulate panic the moment the market moves against them. I had a choice to make. Instead of panicking or revenge trading, I refused to touch the mouse. I forced myself to trust the original setup. Slowly, the agonizing momentum began to stall. The aggressive buying dried up, and sellers started to regain control over the price action. Relieved exhale. The trade finally stopped climbing. It reversed direction, dropping steadily back down into profitable territory. I closed the position safely. Financially, it was only a minor profit, but mentally, holding that line without giving in to fear felt like a massive victory in discipline. Day two taught me exactly how this game works. The market is designed to attack your emotions long before it actually drains your bank account. The capacity to suppress biological fear and greed is the only real dividing line between a professional trader and someone who is simply gambling with a chart. Long-term survival in the market relies entirely on executing your process consistently, not on chasing massive, reckless wins. 2 days of this challenge are complete, and the compounding mental exhaustion is already heavy. The journey continues, and day 3 could change everything. So make sure you're subscribed to see if we survive it.